today, and clearly the economy is slowing. But they haven't really had a cyclical slowdown before, and I think that's what's in front of them. So that really kind of worried me when I heard the conference call, coming at a time when the government is slowing their ability to acquire companies. And if you look back at the history, these companies really grew by a lot of bolt-on acquisitions. And that's not happening as quickly anymore. So I think the growth rate is really challenged for some of these very big companies.
Andrew, you're reading my script. You and I remember when, like lemmings off a cliff, there were roll-ups. Remember Specialty Chemical? It was like Tuesday, Wednesday, Thursday, 6 roll-ups of an industry. And my theme for next year is the great zombie roll-up. Now that we have a risk-free rate that's legitimate, all the ramifications, including crypto, of the price of money actually matters now. Do you anticipate that zombies across all industries will be put out of their misery?
Well, I don't know about that, but what I do know is what worked in the last bull market. These uber growth stocks, I think they're going to still have trouble because even though they're down a lot, I think they could rally into year end if we get this little rally. But eventually, when the market stands up and says, "Oh my gosh, we're not going back to this low inflation, low growth environment," I think that's the next leg down that people are going to say, "Oh my gosh, I got to be careful what I pay for stocks. Don't buy last bull market winners."
Andrew, one final question.
Reminds me, Tom, that so reminds me of 2001, where all the way down after dot-com bust, people kept asking me, "Hey, what do you think about the darlings of the previous?"
But this is critical. Okay, we're going to rip up the script here. Andrew, thank you so much. This is really, really important, folks. So Andrew and I remember that what we massively got wrong was a calculation of profitability in 99 and 00 onto the debacle of 01. Is that shadow out there right now, Andrew, that maybe we're miscalculating across the 4 accounting statements of the might and the power of these profitable companies?
Well, I could be wrong. These large cap tech stocks could continue to do well. But I do think, Tom, that profitability is going down because wage inflation is not, there's a third group that's standing up and saying, we want to participate. We didn't participate 2010 to 2019. We want to participate. The pie's got to be cut another way, which means margins are more permanently going down, which means profitability is going down, which means earnings growth is going down. That means the returns for the market overall are not going to be as good the next 5 years. I don't believe that, but I believe given the structure of the S&P, there are huge opportunities underneath the surface. It's just, again, the cap weighted I'm less optimistic about.
Andrew Slayman, thank you so much. Greatly appreciate it with Morgan Stanley there. Real clinic on how you frame out courage to stay in the market. Again, it is a multiple story Friday here, no question about that. And we've yet to touch crypto. Katie Greifeld doesn't even get going until 10 a.m. She's such a slacker.
Oh, that's not true.
But the thing here about crypto, Lisa, is it trades all weekend. Like people like Katie, they don't get a day off. They have to watch BitDog all through the weekend.
I love your breaking news.
No, but the theme this week is with Bitcoin at $16,700, up $200 just over the last 24 hours. A lot of people are like, okay, when's it break? And when's it crack, if you will?
Why hasn't it broken, right? I love your breaking news. It's that, people who cover crypto don't wake up until 10 and you're not going to be able to drink at the World Cup. Like, basically, these are
we'll get to that in a moment.
But honestly, with respect to crypto, the big question mark is why hasn't there been a huge capitulation of washout when it seems like such major players are having some serious issues? And a lot of people say they don't really know the answer. And they wonder if this is a market, to your question yesterday to Katie. And, this is really an issue. How much is there some kind of transparency in terms of who's playing, how they're playing, and where things are really being valued?
For those keeping score at home, as an amateur, I'm focused on Genesis, but mostly what I'm doing is reading the Bloomberg experts' work. I'm just trying to learn. People are busting my chops about this. Yeah, it's a clinic with Greifeld. There's no question about that. But I'm trying to learn within this debacle.
Did you read some of that direct message response?
No, I did not.
From FTX?
No, I don't have the energy to do it.
Absolutely lambasting the regulators and talking about them. I mean, what point does that kind of attract scrutiny?
Surveillance correction. Thank you, Anne-Marie Horton in Indonesia, for making clear to me Bud Zero will be served in Doha. Anheuser-Busch said, I was wrong. They didn't call me. The Clydesdales called Anne-Marie. Bud Zero will be served.
Are they trying to get
Doha.
you there? Would that be enough?
No, we're trying to get Faro there as well. And someone asked, are they serving
Send
Tang
him.
Zero? And that's just understood. In fact, they have Tang Zero on the bench for all the different players.
Yeah, it's a sponsor.
As well. Must listen, must watch. Amrita Sen on oil. Suddenly, Brent important. Bloomberg surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. North Korea has fired a suspected intercontinental ballistic missile, a day after warning the U.S. over continued military drills with allies in the region. Japanese Prime Minister Fumio Kishida said the missile probably landed inside the country's exclusive economic zone. Meanwhile, at the Asia-Pacific Economic Cooperation Forum in Bangkok, U.S. Vice President Kamala Harris met with allies on North Korea and reaffirmed the U.S.'s commitment to Asia. Harris is representing President Biden in the last of 3 back-to-back summits in Southeast Asia. In a speech to business executives today, Harris pledged to uphold international economic rules. Goldman Sachs analysts are turning bullish on the equity markets of China and South Korea, predicting they will outperform in 2023 as Beijing relaxes its COVID-0 policy and the global backdrop improves. Strategists, including Timothy Moe, say that both the MSCI China benchmark and the country's CSI 300 index will rise by 16% in the next 12 months. They also raised South Korea to overweight from neutral and Hong Kong to market weight. JP Morgan Chase made sweeping improvements to its employee benefits, including giving 16 weeks of leave for the birth or adoption of a child. The bank will increase sick days for full-time employees to 10 days from 6 and bump up bereavement to 20 days. Under a new policy, employees will also be eligible for up to 4 weeks paid time off to care for a seriously ill spouse, domestic partner, child, or parent. Those new benefits start January 1st. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
You do not get stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
We are all united in our commitment to getting inflation back down to our 2% target. It's an open question of how far we are going to have to go with interest rates to bring that demand down into balance. We have raised interest rates a lot this year, so there's a lot of tightening in the pipeline. We have not felt the full effects yet, and yet inflation is still very high.
The gentleman from Aerospace Engineering, Neil Kashkari, Minneapolis Fed president, always different, always nuanced, and controversial he can be as well. How far will the Fed go? It is a parlor game advanced by the non-aerospace engineer of Frankfurt, Christine Lagarde, again today. Lagarde, to me, Lisa, was sounding very Powell-like today.
Yeah.
And I don't think she can get away with that, my one opinion, but there it was.
Yeah.
Sounding very Powell-like.
Trying to send the same message. How much is this job in the market? I do wonder if that's the case. One central bank that is not sounding very much like either of them is China's central bank. And one of the policy members on that bank said that China should aim for at least 5% growth in GDP next year, and that economic growth should be the urgent priority to get it back to a normal track and reasonable aim.
And I have stated my number one variable for 2023, within, zombie roll-up and all that, is China. Yeah. China's a mystery, and I can't imagine the socio-political pressure to get back to 5% growth.
Yeah, well, and this
just to be remarkable.
The fact that central bankers are talking about this and talking about adjusting monetary policy to respond to a possible reopening so that there isn't too much inflation really kind of feeds this feeling in markets that perhaps they're preparing for some real shift in policy on a number of different fronts that could question some of the other domestic issues, like, for example, commodities.
And it dovetails into Brent crude 89.13, West Texas Intermediate 81.32, giving it back on demand worries. We are briefed by Amrita Sen of Energy Aspects this morning. Amrita, help me with a recent pullback in oil. Is it just a bet demand won't be there?
No, I think there's a lot of confusion in the market right now, right? And yes, demand in China is weak, and this is something we've been saying for some time. Don't get too excited by all the headlines coming out of China about reopening, because that reopening isn't happening till April of next year. So right here, right now, there are more lockdowns, so absolutely demand in China will remain weak for now. The thing is, the rest of the world, demand is actually pretty decent, and the numbers coming in have actually surprised to the upside and not downside.
So how does that frame up for next year? Every 100-page report I skim through says Pacific Rim demand is the variable. If we get what Lisa talks about, 5% China GDP growth, does that reverse you out to $120 a barrel?
Absolutely. China is going to be critical for next year's balances, and I think, again, if you look at what has caused this year's kind of softness, it's been China. It's not that we were expecting a reopening, but these renewed lockdowns have actually dented demand quite substantially more than we or the market was expecting. And I think that's one of the biggest reasons why China is not out buying crude right now. they are going to be the biggest variable for next year, especially given all the uncertainties around Russian oil with the EU embargo kicking in on the 5th of December. We are going to lose some Russian barrels, but that is again going to be after the product embargo on the 5th of February. So the timing is going to be critical that if China starts to reopen from April, the real upside and the real tightening in balances is going to be then.
Why is the bull case for oil not coming to fruition now, given that we are getting a bit colder now and that we do have a bit more resilient of a U.S. economy?
Yeah, I mean, look, there's a lot of year-end positioning going on as well. But what and this gets a little bit technical, so bear with me. But I think what's been interesting is, you know, and I've seen a lot of kind of narrative around this, that crude has obviously sold off, and that just means everything is very bearish. If you look at the products markets, pretty much every single product, and all of them in Asia, are backwardated. That tells you that the underlying demand conditions are strong. Usually when the market is wobbling because of fundamentals, it tends to come from the product side. But if you look at gasoline, diesel, even fuel oil and naphtha, which had been weaker, have all strengthened over the course of the month. So this is more of a macro thing that's driving crude, stronger dollar, obviously worries about continuous rate hikes. We had even correlation with Bitcoin, which is just insane and tells you that there are not that many specialists are trading crude oil right now. And policy uncertainty, which we've talked about on this show before as well, is just not helping. We don't know, because of the amount of even media reports constantly contradicting one another. Like, you know, we have very strong views about the EU embargo, but people are telling us, clients are telling us, oh, do you think Europe is going to go ahead with the embargo? And I think that's what's creating a lot of confusion in the market.
So even putting aside all of that confusion, when you hear from people who say that actually Europe is in a much better position than they previously were, not just for this winter, but for next winter, do you pay credence to that? Do you feel like crisis averted regardless of what happens in Russia and Ukraine, and that there has been immunization from the conflict?
I'd say right now, sure, Europe is in a much more comfortable position because it's been mild and we have a bunch of LNG cargoes sitting, waiting to be discharged. But if it does get cold, and I really dread to think how people can say that next year is going to be fine as well. We can get through this winter, assuming it's a mild enough winter, no problem. Next year, there's a huge issue. And by the way, this is much more a gas story than an oil story. Oil, we haven't lost Russian oil to begin with, so I don't understand why, even if the talk of ceasefire gains traction, which we completely disagree with to begin with, but let's say it does gain credence, how does it affect oil? Because oil wasn't impacted, so why should oil sell off now? If, you know, even if there is a ceasefire. And that's where I think the market is very confused, and you're just selling, getting like swathes of just macro sell-off and oil getting caught in with it.
Amrita, one final unfair question, in that all of a sudden money costs something. The risk-free rate's legitimate. All of a sudden the investment calculation is like we remember. Do you assume there'll be a boost in energy production in what politicians of all ilk are calling for, which is more production? Are you optimistic hydrocarbon producers will produce more at the margin?
No, and for two simple reasons. One, shareholders continue to tell them not to do so and prioritize green energy. And two, because interest rates are going up, again, servicing debt just gets a lot more expensive. This is the other problem what we're seeing in the US. US production isn't rising particularly sharply, and I think the market will realize this next year. But, of course, the problem for the US is that freight rates have skyrocketed, so moving that oil has become extremely expensive. And I think that's actually going to be a double whammy and weigh on U.S. production even further.
Amrita Sen, thank you so much. Always a clinic. She is with Energy Aspects, just outstanding as well. There it is, Lisa. It's under the zeitgeist, and it's going to become the zeitgeist. The expense of interest. Interest rate expense. Interest rate of the federal debt, name the country. Interest expense to Exxon. Interest expense to even Apple with their, de minimis coupon as well. Interest rates are rising. That's a bill due.
Well, it's not due yet, and I think that's why people are still going for credit.
Fair.
I'm just thinking about what Amrita was talking about, how the financialization of the oil market has just completely changed the dynamic and doesn't give you the same signal in pricing, which is what everyone's been trying to give a narrative. Maybe it doesn't really make sense to do that.
Some intern said to me, should I read The Prize by Daniel Yergin? And I said, it's timeless. That's what you can do about oil. Go back and read the classic from Yergin, The Prize. He's got a few other books out as well. Futures up 24 on a Friday. Yes, we'll get to Twitter. This is Bloomberg Surveillance.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues. We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
We're in the early stages of a sustainability revolution that has the magnitude of the industrial revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority.
Inflation, both here and globally, is a problem, and central banks have created, or at least made the problem worse.
The end of the inflation problem is probably in sight.
I think the market's trying to find its footing.
The market is getting poised for a breakout, even more inverted from here.
The market strength has brought with it looser financial conditions, which is not what the Fed wants.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television, Bloomberg Surveillance. Forget about sliding into the weekend. An extraordinary news flow. David Balin will be with us in moments. After Andrew Sliman, to go to David Balin is decades of perspective of what to do on the market, but neither of them know what to do on Twitter. Lisa, there's no other story. 10 o'clock, 11 o'clock, East Coast time last night. The dawning awareness Twitter could be toast.
Well, the fact that a lot of employees are leaving and some of them are even warning that potentially it might have trouble operating. It has not had trouble operating. And all these people tweeted all of these last tweets and, these last wishes to all of their listeners and followers. And then, of course, they wake up and it's still working. So we'll see what happens. But it's going to be an issue for a broader swath of regulators, as well as, of course, what are they going to do with the fact that Elon Musk just paid all that money for this firm?
Well, that's the financial side. You mentioned that in the last hour. Justin Wolfers, the acclaimed Australian economist. Good morning, Ann Arbor, Michigan. Wolfers, we're finally going to see a Musk product in self-driving mode. That really puts the true together.
Yeah, absolutely. And he's what, Chief Twit? And he basically is saying, we want to be hardcore. If you're going to be hardcore, press here. Nobody did. So that's where we're at right now.
Justin is so cut and chiseled. He runs the marathon. He runs the New York City Marathon and actually competes with the heavyweights up front as well. I mean, there we are on Twitter. And BitDog, what do we do? Up $200 from yesterday's OMG. It's all going to die. No, it isn't.
There's a bigger question here about all of these pockets of stress that we see. And there's some idiosyncratic, Twitter. There are some more systemic, potentially Bitcoin, or maybe idiosyncratic, given where FTX is. Why have we not seen the big kaboom from the withdrawal of liquidity from markets? And that's been one of the questions, especially given some of the hawkish speak, not only from the Fed speakers, but also from ECB President Christine Lagarde earlier this morning.
Well, Lagarde making important comments. Folks, this has been floating here through the morning, and for those of you that join us for our entire 3 hours, Mandeep Singh will join us here later in the hour. He is expert on what goes on behind the building, behind that single headquarters of Twitter in California. Right now, we've got to look at the financial story with the data. Futures up 25, Dow futures up 153, VIX quiescent 23.70. But Lisa, before your brief, we've got to look at further curve inversion just in the last 24 hours. What does that mean?
This means that people are getting paid more to go short term than they are to go long term, to lend long term. This raises a question of recession, pretty much without a doubt. And you're seeing this curve inversion across the board, including the Fed yield curve, which has been a big issue. Why are we not seeing it reflected in certain pockets of optimism that still are out there?
Let me walk this through as an amateur. So, oil's off in the last 24 hours, Brent under 90, OMG, slow down, 10-year yield, price up, yield down. Is that how you get to further inversion?
Exactly. Oh, well, actually, price up, price down, yield up, but not as much as yields are up on the front end. That's what it's been all week, right? So there's been this question of, again, the Fed raising rates to restrictive levels. What we're looking at right now, though, is how much has already been priced in and what is the consequence of that? That's been a big issue.
Okay, give me a brief here. You lost me there in the last dynamics there. 2-10 spread, I'm sorry, it's confusing math any day of the week. And not, Friday week, we just can't do that.
And I confused you even more. So we're going to be speaking with central bankers who are going to be perhaps creating a more clear discussion. Over in Europe, we've got Bundesbank President Joachim Nagel, ECB's Klaus Knott at 8:15, and Bank of England's Catherine Mann at 8:15. I'm very interested to hear from them.
Catherine Mann out of MIT. Is she a hawk? I think so. She's like, let's go, raise it. She's on the edge of Bullard.
Let's hear what she has to say and how she nuances it into a downturn. Susan Collins at 8:30 from the Boston Fed. At 10 a.m., we get U.S. existing home sales. How much do we see just the number of sales fall off a cliff? We saw home builder sentiment fall off a cliff to levels that we haven't seen going back more than a decade if you strip out the pandemic ramifications, a fast-moving story.
And I'm right that this is a richer data series than one number. There's more data underneath it.
There is, but here's the issue. Housing is the first ball to drop, right? That is typically the first industry to get affected most severely from rate hikes. So how much do people glean some sort of insight in what's going to happen to the broader economy after that? And on Sunday, the World Cup is beginning in Doha, and I'm very curious to see how that transpires and how that distracts everyone.
Simone Foxman will join us. She is there in Doha. She'll be with us here in a bit. Right now, David Balin, Chief Investment Officer, Global Head of Investments at Citi Global Wealth. David, I'm not surprised to hear you say quality is in order for 2023, but color the quality. What does it look like?
Well, it's those stocks that, are going to continue to earn money all the way through next year without a decline, those stocks that pay dividends and pay buybacks. What you and Lisa were just talking about is incredibly important because the Fed has raised rates and is going to raise rates more, looking at the data on inflation that is behind it, the leading, the lagging indicators. That's what they're looking at. And as a result, they're going to have rates go too high and they're going to keep them there for too long. And if they do that, we are going to have not only a recession, but potentially a serious in terms of its length and potentially its breadth. And that's really what's being set up here. And the market, looks at it somewhat sanguine, with a sanguine lens, and I think that's a mistake because really what we're dealing here is potentially with an earnings decline that is not yet priced into the market for 2023.
The earnings decline assumes also revenue decline. Do you just assume with a dearth of nominal GDP off the oddities of the last 24 months that revenue growth comes in as well as earnings?
What actually is going to come in, Tom, is the profit margin, right? Revenues will go up, of course, with inflation, but costs are going to go up more than that. The ability for people who produce goods to actually pass on price increases is going to go away. And the reason is because inventories are extremely high. And what inventories do is they drive prices down, so we'll all be able to buy, things less expensively during this coming, Black Friday and Christmas season. But ultimately, it's going to make profits, go down next year. And I think it's going to cause, the economy to slow more than people think because, once inventories build like this, then production, future production will be reducing disproportionately downward.
David, I want to sit on something that you said, that potentially because the Fed's going to raise rates far beyond people think, even in the face of weakness that is happening more rapidly than perhaps people realize, this is going to lead to a long and potentially deep recession, right? I mean, that's essentially what you're saying, and then that's not being priced in. I'm looking right now to NASDAQ, down 28% this year. I'm looking at an S&P, down 16% this year. Where is it not being priced in?
Well, Lisa, if you actually take a look at recessions historically, they could see markets down, easily between 30 and 40%. But this is the most important single line that, I think people are missing. Markets have never bottomed before a recession has begun. Look back at the historical data. And that's why, you see these bear market rallies, you see short covering, you see the fact that we're in the fourth quarter, and the fourth quarter is always a good quarter. All of those things are true too. But what we have to do is actually price in what is going to happen in the future. And what you said earlier, let's take a look at housing as a leading indicator. Right now, the houses that were started a year ago when interest rates were 3% need to be completed. So the amount of housing unemployment that's taking place is virtually zero. We think that there'll be 400,000 people unemployed in housing next year, and about 2 million people who will be unemployed across the economy, which is not especially deep recession, but it's certainly not positive employment growth as we've seen almost all year long.
David, what does this mean in terms of what you're recommending to your clients? I mean, if you're talking about a long and deep recession, is this hideout in 10-year treasuries? Is this hiding out in T-bills until we have a better sense of what's going to happen?
Yeah, we are deeply weighted, Lisa. We are deeply overweight bonds at the moment. We think that bonds are going to be a terrific investment, by the way, because if you buy a 10-year bond today at let's say 380, right, and it happens to go to 3%, and you hold it for a year and change, that total return on that bond could be 10% because we think interest rates are going to be down a year to a year and a half from now. We think the long-term rate on the 10-year can be between 2.50 and 3, and that's because once a recession begins, rates will, of course, come down. And once we have unemployment prints for a couple of months, the Fed will finally realize, as Volcker did, that they have to do something about it.
Well, your economics team, and good morning, Andrew Hollenhorst, who's been way out front on the slowdown, called David Balin. We've got to stagger to December 2nd, and all of a sudden the jobs report, which is of interest. Are we going to see the unemployment rate move in December yet, or does that wait till the first week of January?
Well, it certainly could, Tom. The rate has come down, relatively little so far, but what we're seeing are, the postings come down. We're seeing a lot of pre-announcements of layoffs all across the tech industry. Some of the names you were talking about, are planning, 10 and 15,000, layoffs next year, but those haven't happened yet. And of course, we haven't seen the sort of industrial companies lay off anybody at this point because of the hoarding of labor.
David, thank you for the brief. David Balin, Citigroup Global Wealth. Just thrilled to have him on today. Right now, Standard & Poor's 500 up 0.8%, 31 points. A nice lift to the market. Off the radar, even though Anne-Marie Horton is in Indonesia, this is completely out of the zeitgeist this morning. EM reacting to what Lagarde's talking about. EM reacting to what Powell's talking about. The Philippines with a Fed-like 75 basis point rate increase, and Jakarta comes on just behind with a rate rise. Is that a precursor to what Damian Sassower sees into next year?
If you take a look at the outlooks that are starting to trickle out of Wall Street, they're actually very constructive at emerging markets next year, almost all of them. And the reason why is
But they were last year too.
right,
weren't
and
they?
they could be wrong, but the theory behind them, I'm not saying that, but I'm just saying, yeah, go for it. But what I'm trying to say here is that basically people have seen how much they've already hiked rates, and for the potential for them to perhaps move off and be ahead of the curve a little bit more. And that's why you've seen a bit more resilience in certain areas. But yeah, they have to keep up with the Fed. And this is the reason why certain markets are going to get crushed by the fact that the Fed is going to go as high as some people think.
The headline there from Balin is something you'd hear from the wonderful and great Dan Fuss. Under crisis, price up and yield down, I believe, is what I heard as a Citigroup call. Futures up 30, Dow futures advance up 185. Nice lift of the market, getting back near SPX 4000. This is Bloomberg Surveillance. Stay with us on radio, on television.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. European Central Bank President Christine Lagarde says interest rates may need to be lifted to levels that restrict economic expansion in order to drive down inflation. Lagarde adds that the risk of recession has also increased, but that a downturn on its own won't be sufficient to tame soaring prices. The ECB is expected to raise borrowing costs to 2% or more next month. A Swedish investigation into the ruptures at the Nord Stream 1 and 2 gas lines finds the cause is, quote, grievous sabotage. The investigation will continue analyzing the sections where the damage occurred and explosive residue was found. The pipeline, which crosses the Baltic Sea to Germany from Russia, is a focus of a probe by authorities in Sweden after 2 leaks were discovered. And a group of Democratic senators are asking the U.S. Federal Trade Commission to look into whether Twitter breached consumer protection laws under Elon Musk's ownership. In a letter to the Dems claim that the loss of key executives who oversaw privacy, security, cybersecurity, and integrity at Twitter, it calls into question whether personal data is adequately protected. Meanwhile, Twitter has closed its offices until Monday after Musk gave an ultimatum to either commit to working long hours at high intensity or to leave. A memo seen by Bloomberg urges staff to refrain from discussing confidential information on the social media or in the press. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been and will continue to do so. We'll take a little bit of a margin compression on that as we've had to. And I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Teams at the Fed are on Bloomberg.
I think it will probably be appropriate soon to move to a slower pace of increases, but we have additional work to do.
Nobody covers the Fed like Bloomberg.
With great confidence in our caucus, I will not seek re-election to Democratic leadership in the next Congress. For me, the hours come for a new generation to lead the Democratic caucus that I so deeply respect.
Nancy D'Alessandro of Baltimore, on to Nancy Pelosi of California, an historic moment seen in Washington yesterday. Lisa Abramowitz and Tom Keene. John Farrell off today. We'll get right to it with the discussion of the speaker. Anne-Marie Horton joins from Indonesia, picking up the pieces of the G20 meeting. Anne-Marie, I remember Speaker Rayburn, Sam Rayburn, who sat behind Roosevelt in 1941 for the Day of Infamy speech and had 3 bouts as Speaker. He was, whether you liked him or hated him, whatever the politics was, he was dominant in the middle of the 20th century. Compare and contrast that to the dominance of Nancy Pelosi. What will be her legacy?
Well, I think there's no question she was a force within not just the Democratic Party, but the entire Congress. I mean, when you see the reverence the Democrats have for her, but then at the same time, the respect her opponents on the Republican side, of course, for the far right, she was really enemy number one. And we've seen that, and most sadly seen that recently with the attack on her husband. But look at what Representative Tom Cole from Oklahoma said. This is someone that you begrudgingly respect. It's like seeing the best player on the team you hate. That's who she was for a lot of Republicans. I mean, the legislation, if you think about over the years that she was able to push through, she is obviously leaving a huge historic mark, not also because she was the first female, but a huge historic mark on Congress.
There's been a huge focus, Anne-Marie, on the Republicans is over to Trump, MAGA, et cetera, or centrist Republicans, and very little about how the Democrats readjust. Does a new minority leader for the Democrats in the House readjust centrist or readjust to the comfortable progressive liberal side?
I think they're going to have to balance both sides the way Speaker Pelosi did. I mean, there's not this contentious relationship, though, like you're seeing on the Republican side in the sense of who they should put up. It does seem like everyone is coalescing around Hakeem Jeffries to take that #1 spot. And then, of course, today we have just 15 minutes ago or so, the representative from Massachusetts, Kathleen Clark, coming out looking for the #2 spot as a whip. And these individuals are they've been able able to both talk to the moderates at the same time also the progressives, especially Hakeem Jeffries. He has been incredibly influential when it comes to that bridge in terms of the moderates and the progressives, getting the progressives on side or saying to the progressives, I'm sorry, but we have to get this legislation through. I'm going to have to side with the moderates. But it obviously is going to be a different shift because it's a generational shift. These are very different individuals and players, but of course there's still going to be Hoyer around, there's still going to be Pelosi around, Clyburn around, and they are going to really act as those mentors. But Speaker Pelosi said it interestingly to a number of reporters that she doesn't want to be the mother-in-law in the kitchen on Thanksgiving dinner saying my son doesn't like to make the stuffing that way. She is going to
that
let
never
them
happened
set
at the
their own
Hordern
cadence
House.
and tone
We
as
never
well.
saw that at the Hordern House, did we, Lisa? At the Hordern House, the mother-in-law never stepped in to say how to make the tomato sauce?
My extensive experience in the Hordern House can confirm that never happened in the Hordern House. And Marie, I am curious if there is some sort of bipartisan agreement when it comes to Twitter, when it comes to social media, and how much it's important to get a better sense of what's happening on a pretty fast-moving story.
Well, it's so funny because on the right, they have been going after Twitter and Facebook in terms of how they have at some times blocked individuals. Look at right now, the leader of the Republican Party is still the former president. He's not even allowed on their social media site. And now you're hearing from the Democrats writing a letter to the FTC saying, please look into what Mr. Musk is doing at this company. You have a number of executives leaving. These people were responsible for cybersecurity, for privacy. And a lot of this comes down to this 2011 consent decree that Twitter had with the FTC, was protecting personal data. And right now, there's a tremendous amount of concern on Capitol Hill that this is potentially going to be worrisome for consumers, worrisome for privacy. So this is one of those moments, Lisa, where you could see Republicans and Democrats come together.
Anne-Marie Horton, thank you so much. Greatly appreciated today. World Cup chat right now. Of course, Lisa and I are really up to speed on this. I'm having so much fun reading about it because every paragraph I read, and I'm really leaning on The Athletic here and their great compendium of stories. I don't know who anyone is. I don't even know the inside jokes they're talking. Where the hell is John to help us out here in our time of need?
This is a great promo. We don't know anything that we're talking about. We look here, we don't understand anything, but it is a really monumental event. When you think about how much money went into this thing, $300 billion. Yeah. And it's building up Doha in this whole new way as they try to prepare for people. Right. And it's controversial. It's hugely controversial.
I saw a photo of the English dashing across a field as they shift to midday practice in Doha. I think it was 89 degrees. And they looked tuckered out is how I would put it. Mr. Kane was leading this. I know who Harry Kane is.
They shifted to the wintertime because it was just too darn hot in the summer times. They had to really shift gears a little bit. But, honestly, we'll be watching that, and we'll be speaking with Simone Foxman, who's over there, in just a little bit. One thing that I wanted to follow on from yesterday, Tom, we were talking a lot about earnings, and we got more earnings from retailers, and they were better than expected. Gap in particular. I mean, just this ongoing sense, Ross stores better than expected.
Each story is different.
Each story is different. Yeah, people are still spending, and this is the reason why it's so hard to get a sense, and the reason why so many people are saying that perhaps the Fed and other central banks are going to go further than people think.
And buried in the zeitgeist of a Friday morning in England, retail sales within their massive gloom, recessionary gloom, retail sales it was a bounce back at least from what it was in the previous 30 days. Again, thank you, Dana Telsey of Telsey Advisory Group, for fabulous perspective this week.
Do you think it's YOLO? Like post-pandemic, you only live once? Might as well buy that thing?
I think there is an element to that, particularly in the way the airlines are packed, which I did not predict. I got that wrong.
I mean, that's been persistent, and we heard all the guidance from all the airlines, and that's ongoing through the holidays. Right. So regardless if people stop spending on things.
And again, overnight, you and I haven't talked about this, but there was a report in the last 24 hours of charge card debt. I think ballooned is the right word. It's really spiked up as people get out the plastic to try to get to December.
Well, how much are people leveraging up to plug the gap from their income versus the inflation-adjusted expense of everything? And that's something that, again, how do we dovetail the strength now into the weakness that so many people are expecting? We're
going to look at the World Cup here in a moment. We're also going to come back and talk to Jane Foley about foreign exchange and whether the dollar sterling at 119 has had a sterling sterling week, if you will, even given all the challenges in England. And then we are going to talk about Twitter. For all of you of Global Wall Street with a maelstrom since 10 o'clock last night, Mandeep Singh will give us perspective here, not to calm things down, because they are not calm on what we see at Twitter in San Francisco. Mandeep Singh, that's must watch and must listen for us. Futures advance up 0.7%, up 29. NASDAQ up on the edge of 1%, a nice lift to equities. Bloomberg surveillance.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Good morning, everyone. Bloomberg Surveillance, Lisa Bramison, Tom Keene, and Jonathan Farrow. John Farrow on assignment. We're looking forward to his effort. Right now, we're going to get to Jane Foley and foreign exchange here in a bit, but Simone Foxman joins us now from a stadium 30 minutes north of Doha, where it is 89 degrees, and it's in the 80s, I guess, here through the next number of days. Simone, on Sunday, it is 60,000 people to see the first kick of, I believe it's Qatar and Ecuador. Exactly how hot will it be in the stadium?
The last time I looked at the forecast, it was supposed to be, I think, the high 80s outside, but in the stadium, it's going to be pretty cool. A lot of these stadiums, like Al Bayt that you see behind me, they have air conditioning technology. They've been built that way, even pretty efficient technology. I mean, I've been in some stadiums actually in the middle of August, and they were still tolerable, if not like cool.
I understand, Simone, that for a girl from Columbia University of New York, you've never tasted Budweiser. I get that. I understand they don't serve it north of like 108th Street. What are they going to do in this uproar about no alcohol, but they're going to serve Bud Zero? Where does that move to a Sunday first kick?
Yeah, so this is in a big about face for organizers. They had initially said that fans would be able to purchase Bud Light within the stadium perimeter, outside the stands themselves. Now they've turned around and said you can't do that. And in fact, so no alcohol is going to be sold anywhere within the stadium perimeter. Alcohol is a really hot flashpoint for Qatar and has been throughout the preparations for this event, because this is a conservative Muslim country. Public drunkenness, illegal. Even alcohol drinking, pretty taboo. There's a lot of restrictions on where you can get alcohol. So folks are going to be able to buy alcohol and Bud Light in the fan zones. They're going to be able to go to restaurants attached to hotels and buy it, hotels themselves. Most of them allow it, but it's not going to be allowed in the stadium perimeter. And that's something, you know, that really upsets fans. Also, the fact that it's being announced about 48 hours before kickoff.
Well, Simone, this raises a larger issue about the culture shift and how this is really a unique World Cup, given that it's being held in Doha, it's being held in the Middle East for the first time, and some of the controversy around how it got there, when it got shifted from the summer to the winter. How much is this an inclusive World Cup with a buy-in of everyone versus one that still has fractures around the edges?
There's certainly fractures around the edges. Yes, organizers have said they're going to tolerate everyone, all nationalities, all religions, all sexual orientations, but they've emphasized that they want people to be respectful of the culture. And on some end, we get reports like my own just a few weeks ago, where I saw an talking about how security forces wouldn't even approach people who were giving public displays of affection, even protesting for gay rights. Those are things that are completely taboo here, but they weren't going to touch them. At the same time, that report actually was very and made a lot of people here angry. And I think that's what we're seeing, particularly with this alcohol decision. The locals not happy with seeing any alcohol at all, and that's why we're getting the move.
Simone, John from England emails in and says, would you cut the chit-chat and show the English team images yesterday? For those of you on Bloomberg Radio, it's a slightly charred and sweaty Harry Kane and the English crew as they consider, you know, they consider the football field yesterday. I thought they looked tuckered and fatigued as well. Simone, what's your favorite team to watch here at this tournament?
Well, I'm a USA fan. Through the fact that they have made it back has helped me avoid a lot of embarrassment that they didn't make it to 2018 in Russia. But you know, I'm actually watching the Danes because they had a great run in the 2020 Euros, made it through to the semifinals. You know, they're not in the top of the list for anybody in terms of actually winning the whole thing, but I'd like to see the orange come through.
Listen to her with
She's
the
in
football
Doha.
talk.
I mean,
killing
of course.
Me. Simone Foxman read in on the World Cup.
Exactly.
Simone, thank you so much. And seriously, folks, the weather report that I see 10 days out for Qatar is not as grim as maybe some people were expecting. We'll have to see on that. We'll look at the business of the World Cup with Ms. Foxman. And of course, we will look for the football of it with Mr. Farrow when he returns. And how dumb are we? We're like wicked dumb here.
Well, and we forgive everyone for not watching us next week when you're watching the World Cup instead, because that's probably where the focus will be ahead of the Thanksgiving break. We'll have like a little icon that kind of gives a little.
Oh, come on!
Update.
You watch the World Cup and you listen to Bloomberg Surveillance on Bloomberg Radio at the same time.
Ah, perfect.
And you get all the benefits of Farrow in his coverage of the Italian soccer team and their effort this year. You know, it'll be good.
Hopefully, Dave Foley hopefully will.
Italy didn't make it. Shh, it's a joke. Except it's not a joke. One guy at The Athletic said that was the single worst thing, is Italy didn't make it. He says they've got the best fans. Seriously. Right now, Jane Foley joins us as we segue over to foreign exchange. Jane Foley knows we can do that as well. Jane, how do you readjust to weak dollar here? When you write into 2023, how do you adjust to a new U.S. dollar?
You know, I think we've got some two-way here. I think we clearly had the market very long positioned of the dollar, and we've had a clearing out of those positions, which is actually a relief to get this two-way back. But, you know, I don't think this is all over for the strong dollar trade. I think there's still a lot of pain to come in terms of the global economy. I think there's still a lot of hawkishness yet to come and feed through from the Fed. And there's possibly some sort of misdirection in terms of what the market is focusing on. We're all talking about peak dollar, peak Fed, but actually, I think the message, or one of the big themes of 2023, is going to be the lesson that inflation now is a lot more persistent. And I think that's where the focus is going to come through. There's several macro reasons, the labor market particularly, to expect inflation to be higher for longer, so that even if we reach peak rates, say in the spring, that rates will remain higher for longer. And that, of course, is a dynamic that the market's going to have to adjust to. And that could mean that dollar strength, even if it comes off its highs, will remain stronger for longer.
But Jane, how do you factor in the fact that Europe has essentially escaped the worst case scenario of an energy crisis heading into a cold winter when it's actually warmer than expected, and it seems like they've stockpiled enough natural gas?
I think, I think that's what the market has been reacting to in the last few weeks. I think the euro has certainly been lifted on the back of that. But actually, I think there's a lot more pain to come for Europe. I mean, even listening to Christine Lagarde this morning, warning about a pretty tough recession, warning that rates are going to have to become more persistent. You come into the scenario where the Bank of England is in, where you have a central bank hiking into a recession and the currency doesn't react to that. Bear in mind also that the Eurozone has sort of had its current account position really impaired by the fact that it's importing so much expensive, or has been importing so much expensive energy. And then, of course, we move on to winter 2023, which I think is going to be the real focus into early next year, because a lot of the gas that we have in Europe this year now, our systems are full, it has come from Russia. Now, that's not going to be the case when we head into winter 2023. So, yes, the euro seems to be, buoyant on the fact that it's warm and the gas prices has come down, but there's a lot more pain to come.
So, Jane, is everybody going to do trading for another 2 weeks and then go home? I mean, is this basically the last window where we get actual trading activity before people close up shop, close their books, go off on holiday?
I think the news is still coming thick and fast. I think there's going to be a lot of volatility. I mean, one thing that really does worry me is that if a lot of people do close off, then we're potentially going to have even more volatility if we have, thin liquidity. So that's, I think a potential risk going into the end of the year. To be honest, I think volatility is here to stay. I think that's just very much a function of the difficulties in moving from an environment of QE over to QT, for instance. I think the economic shocks, the geopolitics, that they're all still very much alive and kicking. And I think we're still going to be facing an awful lot of volatility in 2023.
Jane Foley, thank you so much. Greatly appreciate it this morning. It's too short a visit. We'll do it longer next time. Jane Foley of Rabobank there. And of course, on foreign exchange, it's not only about the speculation of what dollar does, but it's the hedging as well, which has some real uncertainty into the new year. Mandy Sim's going to join us here, but we're going to take 2 minutes now to look at something, Lisa, I've never, ever, ever seen on the Bloomberg terminal. A spokesman of a major nation commenting on the validity of social media. Germany, Scholz spokesman, Germany watching Twitter with growing concern. You can't make this up.
Olaf Scholz and his spokesman raising some issues with this. It comes as other European regulators actually have been weighing in as well. We heard earlier this morning that regulators were mandating that Twitter enforce some sort of moderation of the content, trying to prevent some of the trolling, some of the hate, some of the fake profiles, or just simply replicating people maliciously. Elon Musk, defiant on Twitter. He posted one tweet of him with a sort of bird, a Twitter bird over his face, going like this next to with like basically giving a signal as he looks at a grave that has Twitter on the
But
gravestone.
aren't there two stories going on this Friday morning, folks, as you're waking up to this? One is Scholl's regulation, cultural issues, if you will, on Twitter. And the other is the validity of the computer platform. Aren't there two separate stories going on here?
The validity of the computer
At least that's
platform.
a script I got.
Well,
I have no clue.
there's a regulation. There's a question of just the functioning of the company, given how many people are said to have walked out the door or been laid off. And so how do they keep functioning? Right now, everyone's been coming on Twitter and basically saying, it seems like it's still here and still working. So
Are you going to move to Instagram? I'm not. Instagram's not the same as Twitter, right?
Very difficult to see where people are going to go. People are talking about Mastodon, and then you go, and there are all these different, different platforms.
Mastodon is a thing?
Yeah, and it's basically, it says a lot from it. But
Twitter Mini?
How do you deal with the fact, though, that you have a rogue kind of company that's the town hall, that's a town square that people use, and for everyone, not just for individuals, but also for companies? I mean, this is massive rearranging of strategy.
Stay with us on radio and TV. We're going to do a definitive discussion on this with someone with true computer experience. Mandeep Singh will join us. Stay with us. Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Ukrainian forces continue to fend off Russian assaults in the east. Kyiv is enduring long periods without power following multiple attacks on critical energy infrastructure across the country. Meanwhile, Pope Francis said in an interview, the Vatican is available to do, quote, everything possible to mediate. President Volodymyr Zelensky maintains that only the return of territory taken by Russia will allow an end to the war. Qatari officials are set to ban the sale of alcohol within its World Cup stadium. Now, the move is a dramatic reversal of an earlier decision to allow Anheuser-Busch to sell Budweiser beer. Bloomberg has learned it will likely result in moving concession stands serving alcohol further away from the stadiums. The tournament kicks off Sunday with the hosts taking on Ecuador. North Korea has fired a suspected intercontinental ballistic missile a day after warning the U.S. over continued military drills with allies in the region. Japanese Prime Minister Fumio Kishida says the missile probably landed inside the country's exclusive economic zone. And J.P. Morgan Chase made sweeping improvements to its employee benefits, including giving 16 weeks of leave for the birth adoption of a child. The bank will increase sick days for full-time employees to 10 days from 6 and bump bereavement days to 20. Under a new policy, employees will also be eligible for up to 4 weeks paid time off to care for a seriously ill spouse, domestic partner, child, or parent. The new benefits start January 1st. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
We're in the early stages of a sustainability revolution that has the magnitude of the Industrial Revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority.
Is inflation both here and globally is a problem, and central banks have created, or at least made the problem worse, by staying too easy for too long after the pandemic, and that liquidity and that stimulus has to be soaked up.
John Riding, just brilliant yesterday on Fed dynamics here and some of what we're going to see in 2023, and particularly his true skill and experience with the Bank of England. Wonderful to speak to Mr. Riding yesterday. Futures advance up 0.7%. Nice lift to the market, a persistent lift to the market this morning with higher yields. 10-year yield not 4%, 3.79%. Two-year yield not 5%, 4.49%. And my headline this morning within the broader markets is Brent crude from a 90 down to 88.38. Lisa Abramowitz and Tom Keene, John Farrell on assignment. No, somebody emailed, is he in Doha? And I said, I'm not sure, but he didn't make it to Doha, right? He just said, he's just the heat.
Milan wasn't there. I mean, come on. He wasn't going to go if Milan's not going to be there.
Yeah, I think that was
AC
a
Milan,
little bit.
No,
it's not AC Milan. It's the Italy team. I think it's like a national team of the best players from Naples and Genoa. And
thank you. Obviously, my knowledge is deep.
Yeah, we're
I'm
killing
not going to be
it.
doing the World Cup coverage here.
Doing better on World Cup football is widely anticipated this morning. Mandeep Singh joins us to say he's senior industry analyst for technology at Bloomberg Intelligence. Barely colors his knowledge of what these people actually do with his New York University engineering. Mandeep, I'm going to go to the Bible, the MIT Technology Review, in an absolutely definitive article by Chris Stokel-Walker a few days ago. Who are these people? Let's take it from Butch Cassidy. When an engineer sits in Twitter and looks at his screen, whatever his responsibility, what do they actually do? Do they do code?
Well, so look, I think with an app like Twitter, you really have to think of all the functionality and the features that the app has, as well as the content side of it is moderated differently. But clearly the user experience comes from the fact that, you have to constantly improve features and make it easy for people to, engage with a platform like Twitter, both on the creator side and the consumer side. And in this case, because he has fired, over 50% of the workforce without knowing who is critical to the development velocity and, enhancing these features, it's hard for me to imagine that there is much going on in terms of changes to the app or really enhancing that app. And that to me is the worry here, because right now, the focus is on content and firing people, but what do you do in terms of just improving the experience on an ongoing basis?
The thrust of Stokel Walker's MIT article with Ben Kruger, who actually worked at Twitter or works at Twitter right now, I'm not sure which, is Ben Kruger really emphasizes the interdependencies of different engineering functions at any given company. Bring that over to the fear this morning in the zeitgeist that Twitter's going to shut down at any moment. Does the risk of a lack of interdependencies working lead to a shutdown of this social media platform?
Especially if, you're right, Tom, if they lose people on the infrastructure side in terms of who is really provisioning the app and making sure, it can handle these many users. Once you start losing people on the infrastructure side, and these people are the ones who really are critical in terms of keeping everything up and running, that's where it becomes a problem. Even if you want to bring somebody over from Tesla, for example, or, one of his other companies, it's not that easy to figure out how do you maintain these critical systems and keep them, live. And to me, that is the key challenge. And advertisers, are already pulling off because of the content moderation issues. They don't find the platform to be brand safe anymore. So there are a lot of problems, both on the, revenue side as well as just keeping the app up and running.
There's been a discussion about max exodus. Where do they go? Where do all the Twitter users go?
I mean, the users can find, other platforms. I think Instagram could be a beneficiary here, as could, some of the other smaller platforms that may come up as a viable alternative to Twitter. We still don't know what that could be. But look, this is the time to be thinking about, an alternative to Twitter, because clearly the creators are looking for something else than what Twitter has to offer.
So there was just a $44 billion buyout. Elon Musk put his personal wealth behind it to some degree, but so did Wall Street. So did a lot of investors. They invested in this debt. Wall Street's still sitting on those bonds. How much are they going to really pressure Elon Musk to get with it and get a strategy that's a little bit more effective than just, trolling on Twitter?
Yeah, look, I think once you know how much the revenue damage we have already seen, that's when you will start to see the pressure on Musk, in terms of doing something about it. And right now his focus is the blue check and subscriptions. But guess what? Even that, I think he's finding it hard to implement. So he can talk about a lot of things, but implementing it will require people who have knowledge of the app, and it looks like they have fired a lot of those people.
Mandy, Mr. Musk, 8 hours ago on Twitter, the best people are staying, so I'm not super worried. Do you agree? Are the best people staying?
I don't think so. Not in his management style. And, when you fire so many people and you ask them to work 80 hours, I mean, he's throwing all of the traditional management principles out of the window. And maybe he can, keep the morale high just through his style. And look, he's been hugely successful, so nobody can question that. But still, I don't think, this is the way to retain talent and identifying people who are critical to your development velocity.
Mandeep, thank you so much. It's great perspective there. As well, I don't know where to turn right now. I mean, crypto sort of boring me this morning. We're up $200. We're going, we've got a nice rally on Bitcoin here within all that up. I guess we're waiting for headlines there. Are we waiting for headlines from Twitter? I don't know. What are we waiting for after Mandeep's wisdom there? What are we exactly waiting for on Twitter?
To understand what's going to happen next, probably regulatory, any kind of pushback on that front, which we've gotten from both the U.S. as well as Europe. But how much is there really muscle behind that? I'm curious from the banks and the investors and some of this in the buyout. I mean, do they start saying, look, our investment's going to zero? This isn't working. How much pressure is he going to get? And he's kind of an unconventional leader of a company, so it's not clear that he listens.
I don't think I can't speculate on that as well. It used to be like the auctions, the mystery of what we'd see, or now Fed speakers, the mystery of what we see. And to me, it all coalesces together into a middle November tension, the year rapidly ending, money costs something now. That's the overwhelming change of all these different stories. Money costs something for Mr. Musk.
It's true, and this is part of the reason why we were talking about, for example, just the interest payment that he had to pay on the debt being a huge pressure for him. I also think that heading into year end, and this is the reason why there's this real tension. I was looking last night at 4:30 p.m. Eastern at the Fed balance sheet, because that's what I do on Thursdays, and they have actually come down almost $400 billion, more than $300 billion. It's shrunk since the peak earlier this year. That's just the beginning. It went from $9 trillion.
So is that again, too, that means a tightening financial condition?
But yeah, we haven't even seen the bulk of that. To me, that's going to be compelling to see.
Can you imagine happy hour with Lisa Abramowitz? Let's look at the Fed balance sheet.
Gloom hour.
Jim Bianco would love to do that with Lisa. Be helping us here in a moment. Bloomberg Surveillance on a Friday.
这种看着不起眼的小东西，我真的觉得每个人的家里都应该备一个，大大提升了我们生活的幸福感。它是光感家人。
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Strong enough to stay. We will never, no, never. We will never, no.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. The top names in climate change are on Bloomberg.
Building out local wind, local solar, hydrogen, these are solutions to not just climate issues, but geopolitical issues.
We are in a position by 2030 to have 80% of all electricity generated by wind.
Renewables are the safest, the cleanest, and the cheapest form of energy today, especially for countries such as Greece.
Nobody covers climate change like Bloomberg, your global business authority.
there's no doubt about it that inflation is the key to market direction.
Eventually, we're going to see a more significant pullback in risk assets and equities.
Right now, it's a market that's trading on whether inflation is coming in better or worse relative to expectations.
The Federal Reserve funds rate is going to go above 5% up to 5.25%.
This narrative of now pivot to pause is one that is just not yet backed by the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Has this bear market rally already exhausted itself? From New York City for our audience worldwide, Tom Keene, Jonathan Farrow, Lisa Abramowitz, John Farrow is off today. And yes, I am leading with gloom because right now we are looking at a tape that is a little bit optimistic, and yet note after note is just full of gloom. Every single one saying that basically it's running out of steam and will end.
I'm not going to go every single one. I don't know what Binky Chowd is doing over at Deutsche Bank, but you're absolutely right. The zeitgeist into the Friday weekend, reading through the weekend, framing out for 2023 as woe is me, don't buy this rally.
Basically, pretty much across the board with a few exceptions. The key issue here is that the central bankers are basically confirming that. They're coming out one after another. We've gotten talk from the Federal Reserve. We're getting talk from ECB President Christine Lagarde. And they all are saying the same thing. We are going to tighten to restrictive. We are not there yet, and we're not going to necessarily stop just because of pain.
But let's frame this out with Jim Bianco coming up, a really important conversation. Dominic Constable at Mizuho says there's a risk here that they're already super restrictive. And this goes to your world, Lisa, without making a joke about it. We look at the 2s, 10s inversion, and adults like you are looking at the 3-month 10s new inversion, which finally signals the restriction Dr. Constam's talking about.
And we can get into that with our upcoming guest, Jim Bianco. When you look beyond that, though, to the people who don't necessarily see gloom, there are a few of them, including Torsten Slok over at Apollo, saying the soft landing idea could be coming back to the fore because inflation's rolling over, right? We are seeing signs of that. It's just such a motley picture, especially as we see. I mean, if you think about the retail earnings we've gotten, some good, some bad. Consumers are pulling back, but they're still spending. How do you get some sort of sense of where we're heading? And I think that's what you feel in these notes.
I mean, look at that, 70 basis points. For those on radio, we just put up the banner on television, negative 70 basis points, 0.7 of a percentage point difference between the 2-year and the 10-year. Stunning. What I would say, Lisa, and I've always gotten in trouble with this, and the wonderful Alan Meltzer took my head off once on this. Can you aggregate America into a blended, aggregated recession, like maybe what NBER tries to do? Or can we say on this Friday morning, parts of America are in substantial recession?
That's absolutely fair. And how much is that clouding some of the data that we're getting? Also, just want to tell you this, that you're seeing retail shares in general do really well because Foot Locker and Gap and a number of the others have really performed particularly well. We are seeing a bit of a lift overall, though, in general.
Let me start with the data. You pick it up, Lisa. Brent crude under $90 a barrel, 88.13. We're going to get a 79 on West Texas Intermediate. That, I guess, is Pacific Rim China. Maybe they're not going to come back.
Well, Amrita Sen was basically saying she doesn't get any signal from the noise that is the trading in the oil market right now because of how financialized it is. I'm looking at yields. They're kind of, I'll use your word, nudgy. You're seeing a bit of an increase in the 10-year yield right now, looking at 3.79%, but a bigger increase when you look at the short end. And that, I think, has been the theme and sort of confirming your view of that yield curve inversion. Right now, when we talk about yields, we talk about inversion, we talk about the tea leaves to watch. There's no one who I'd rather speak to than Jim Bianco, founder and president of Bianco Research. Jim, do you buy that we can see more with this bear market rally, or is it basically on its last legs?
No, the rally could continue. I do think it is a bear market rally. I mean, you know, it could go to the end of the year, but I don't think necessarily that October 10th was the low. And part of the reason is what has been the hope of every rally we've had this year. The Fed's going to pause. They're going to pivot. They're going to step down. We've got peak inflation. It's all the same thing. And Chairman Powell's been fairly consistent. Every time the market gets itself excited, he comes out and he gives an 8-minute speech and he says, no, I'm not. And then that ends the rally. And I fear that that is eventually going to come with this one, too.
And that's the reason why people have been so focused on the yield curve, because that's telling that story, that the Fed is going to keep going even as people's belief in longer-term growth keeps contraction, keeps coming down. So at what point do you see the signal from perhaps some signs of a softening in CPI that perhaps the Fed has been fully priced in to a market that's not so bad?
Well, I don't think we've got the signal yet. You're right about the yield curve. It is the 10-year, 3-month curve is the one that all economists look at. The 10-year, 2-year curve is what the market looks at. But that economist curve only inverted in the last week or so. And it's saying to us that only in the last week or so is the Fed beginning to get too tight. Everything they've done up till now has not been. And that doesn't mean the Fed has to immediately pause. The market could stay this way for several months before it turns around. The question becomes about inflation. I still think the question about is inflation peaked misplaced? Yeah, it probably has. The better question is it going to 2%? Or is it going to stop at 4?
Right.
Because if it stops at 4, then the Fed has not been too aggressive. It's going to go to 2. It has been. And I'm in the camp it's going to stop somewhere around 4 or 3.5. And that's the real problem. Not that we've peaked, but that we're not on our way back to 2%.
Well, and Jim, that's where I mentioned this in the last hour or the hour before, but the bottom line, Jim Bianco, is all of a sudden the jobs report of December, first week of December, December 2, all of a sudden becomes a lot more important than it was a week ago. Are we going to see a jump in unemployment rate in December, or do we got to wait for the first week of January?
Well, so far this year, the story has always been there's going to be a jump in the unemployment rate. And yet we never get it. We produced 260,000 jobs last month. We produced 4 million jobs this year. And initial claims are still in the low 200,000s. So for everybody that wants to see, I mean wants because they want to rally, they want to see softening in the labor market so that the Fed would pivot or pause. They haven't gotten it yet. And whether or not we're going to see that in the first week of December remains to be seen. But so far this year, it is constant. The employment report has constantly been stronger than everybody expects.
But do you think that's going to break? I mean, our listeners, our viewers are seeing the daily gloom of 10,000 here, freezes here, whatever, on and on and on. Is there a shift now, Jim, to where finally employment matters?
Well, employment does matter. And whether or not we're going to see that shift, you're right. Everybody focuses on layoffs and people losing their job. But what doesn't make the press is people getting jobs. And like I said, we've produced 4 million more jobs this year already. And that is going to be a prerequisite, I think, a weakening labor market to begin the discussion about whether or not the Fed is going to pause. And so far, that has not happened. And I don't think it's going to happen in 2 weeks when we get the next payroll report.
Jim, I want to finish where we began. You originally said you don't necessarily see us getting back down to 2% in terms of inflation, and that rates are not necessarily going to come back down to where they have been, even at 2% kind of level. So where do you see us leveling out? I mean, how persistent is this concern, especially as you have the likes of Jim Bullard putting 7% rates as a potential possibility out there?
I think that the inflation level can be very persistent because I've been one that has argued we're in a post-pandemic economy. That's not like the pre-pandemic economy, and that things have changed, especially in the labor market, in globalization and in energy. It's going to keep inflation high for several years. And that means we're in a new regime with interest rates. That where we are right now with 4% interest rates might only be neutral. And maybe Jim Bullard is right, and that's what we have to start thinking about, that restrictive, sufficiently restrictive, to use his phrase, might be closer to 5 or 6 or 7%, as opposed to thinking that rates are too high right now.
Jim Bianco, thank you so much. Greatly appreciated this morning here on Fed Dynamics and the mystery going forward. We got all these other Friday stories, Bitcoin and crypto and Twitter. Thank you, Mandeep Singh. Taylor Swift update.
Thank
you,
Tom.
We were priced out $34,000 for a ticket. Was it 2 days ago?
Yeah.
There we are. Section 5, row 16, you and me, Houston, sometime in April with Phoebe Bridgers and Gail. $4,050. We've come in a bit from $34,000 to $4,000.
Is this trying to make better conversation at Thanksgiving with the family? Hey, I got everyone Taylor Swift tickets.
There's only two. Well, yeah, please, that's not going to happen. There's only two things in Washington they agree on. They all hate China, and they're all going after Ticketmaster on this. And I really don't understand it. I mean, I really haven't read into it, but Miss Swift, with her acclaim, has got the politicians riled up.
Come on, we've all lived it. We've gone to different sporting events, and you can see that all the seats are empty because they're corporate boxes, and nobody else can buy them except that then when they're sold to the secondary market, they get priced up dramatically. And this is a question: how do you democratize the process of selling the initial batch if demand so far outstrips supply?
Is that a testament to Taylor Swift and what she's done here in and out of
Really? You're going to comment on Taylor Swift?
Oh, I'm so
You're going to talk about your love for Taylor Swift? What are you looking at?
She's piercing. I love Champagne. I think it's just a great song. Where are we here? I'm going to talk oil. Amrita Sen, can we go back? Because that is on this Friday with the inversion, what Jim Bianco talked about. The distinctive thing to me of worry of slowdown is Brent crude 97 to 88 in 12 cups of coffee.
I asked her, why have the bulls been wrong? Why haven't we seen the most extreme cases? And she said, there's a lot of financialization. She didn't want to get too technical, but there's a lot of technical kinds of aspects of this. I just don't understand. The narrative could be one way or another. You either have a global slowdown causing prices to go way down, or you have a shortfall of just the potential production causing prices to go way up, especially with the China opening. I can't really create a narrative from oil right now. I just can't. I mean, it's sort of trading in tandem with other risk assets, it seems like.
Futures up 34. Dow futures now lift above 233,800 on the Dow, getting back to 4,000 on SPX. VIX comes in on a bull market tone, 23.57. Bitcoin up $200 from the gloom of yesterday, 16,700. Please stay with us. Lisa Abramowitz, Tom Keene, and John Farrow on his way to Doha. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In an effort to break deadlocked climate talks in Egypt, the European Union has proposed a loss and damage finance facility for the most vulnerable countries. EU climate chief Frans Timmermans put forward the offer in exchange for a pledge to reduce the use of oil, gas, and coal. It comes after days of little progress at COP27 talks in Sharm el-Sheikh. New renewable energy projects, they will enable Egypt to accelerate plans to become a major supplier of power and hydrogen to Europe. The country's petroleum minister says Egypt wants to send electricity to Cyprus and Greece through a cable that will run under the Mediterranean. It also aims to export hydrogen, which can be used as a fuel for power stations. The petroleum minister says Egypt's hosting of COP27 summit has boosted the momentum of the project. At the Asia-Pacific Economic Cooperation Forum in Bangkok, U.S. Vice President Kamala Harris met with allies on North Korea and reaffirmed the U.S.'s commitment to Asia. Harris is representing President Biden in the last of 3 back-to-back summits in Southeast Asia. In a speech to business executives today, Harris pledged to uphold international economic rules. And Meta fired or disciplined more than 24 employees and contractors in the past year for improperly taking over user accounts, sometimes allegedly for bribes. That's according to the Wall Street Journal. The report says some workers were accused of accepting thousands of dollars in return for giving hackers access to user accounts. A Meta spokesman told the Journal that the company will continue taking appropriate action against people that sell fraudulent services and target its platforms. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
Good morning, everyone. Bloomberg Surveillance, and we welcome you on a Friday. I'm wearing bleu for France. This is Hermes tie. We wear that when Jean-Yves Filion shows up, Chief Executive of BNP Paribas. Lisa Bramwitz and Tom King. John Farrell wishing he was here.
Yeah.
I mean, it's frankly too bad because John is far more knowledgeable of this. But for the gentleman from BNP Paribas, we're going to get right into it with futures up 35. Lisa's got actually adult questions. Forget about it. Explain the joy in 2018 when France pulled this incredibly difficult feat off. What was it like for all of the BNP Paribas family to see France do this 4 years ago?
Well, Tom, thank you for having me, by the way, Lisa, as well. It was a real celebration for the whole country, including at BNP Paribas, obviously, and that was the second time that France won the World Cup. Then there was a lot of expectations for this upcoming World Cup. Vive les Bleus, right? It's always complex to be the defending country to do it, right? Exactly. And you know, today in this soccer landscape, there is no small teams anymore. France is going to play Denmark, so Tunisia, they're going to play Australia, and you just never know. I will keep an eye. I have the privilege of being French and American. Then I have two teams, you know, to support. And because of John, he's not here with us today, but I would keep an eye on England, I promise.
I went to John and I said, give me a smart question to ask Jean-Yves. And he said, ask about a 36-year-old. Olivier is getting a little old. How will an older French team do in the heat in Doha?
Well, it's a combination, you know, the World Cup is a long journey. It's a 1 month competition. And you're right, it's a combination of youth, energy, but experience. And I think this French team is pretty well equipped on both fronts.
So you said that you're both U.S. as well as French, and you can vote for both teams, and you can root for both teams. As the U.S. arm of the biggest European bank, how much is your main company diverting money to you because it is so much stronger here in the U.S.?
Well, this economy is still the most resilient economy in the world. If we look at the status today, in terms of tight labor market, in terms of status of corporate balance sheets, households are still spending, and the capital markets are still functioning, and our U.S. bank here has been benefiting from this. Having said that, our economists are predicting a shallow recession in 2023 because this U.S. economy is still very quite interconnected with the rest of the world. We expect a rebound in 2024.
How much does that affect your willingness to lend? Right? I mean, because if you basically you're tasked with trying to support other aspects of the bank, perhaps that are in other areas that aren't as optimistic, perhaps as the U.S., but the U.S. is also in a difficult spot. How do you decide how loose to be with your purse?
Risk management is critical. You have to be quite selective with the sectors you cover, with the clients you support. But I have to say, if I look at my client needs today, it's around 3 dimensions. Lending, you're right. Even the most frequent issuers in high grade, because of the higher cost of funding, they'd rather wait, and we're actually bridging a significant number of capital market transactions to optimize their capital raising.
Wait, hold on one second. So this is really important. In other words, you're taking it on your books. That basically, you're saying you'll lend at a lower rate than the market rate to have them wait until rates are lower?
It's a combination of lower rates or making sure they can pick the right window. High grade has remained open, but you have to pick your windows if you want to optimize your capital raising. The second important need I see from clients today is risk management and hedging strategies. And it's really across rates and commodities and currencies and equities.
I took a cup of coffee in Beijing decades ago with a senior officer of BNP Paribas with decades of French experience in China. Give us your perspective on how China's going to extricate itself from this mess.
Well, it's definitely not a country I have a lot of connection with. The bank has presence there.
Oh, you understate it. Come on, the bank has huge traditional presence there.
And still, if you expect this economy in 2023 to go through a shallow recession, the Eurozone is already in recession. You still see today China providing some growth to the global economy, which we expect to be for 2022 around 2%. And it's a downturn. In China, a lot of it will be around, getting truly out of the pandemic and obviously expecting some more stability there.
The heritage of your shop is a wonderful reticence to speak about economic boom. Your economist, Carl Riccadonna, who we've got a nodding acquaintance with. Thank you, sir, for stealing him from Bloomberg.
We love him, by the way.
We'll never forgive you. But Mr. Riccadonna and back to Dr. Coronado have been dead on about GDP. What does he say in this titanic battle we're having on recession?
Carl, and by the way, it was my only way to really continue to be part of the Bloomberg family, to have Carl on deck, right?
Okay.
And we love it. And thank you for
Nice
that,
spin.
for having trained him for so many years. Carl is saying in 2023, a shallow recession, as we just discussed, minus 1%. But he's very confident that in 2024, he sees this rebound because of the good foundations of the resiliency of this economy and back to a more normalized GDP growth around, 2%.
How concerned are you as you look at some of the risk management you were talking about earlier, as you decide how much to lend? How do you factor in exogenous events? How do you factor in a colder winter? How do you focus in? How do you fold in the prospect of a Federal Reserve that potentially could go well beyond what people currently are thinking?
I wish we had all the answers to your wonderful question.
Correct.
Lisa.
So how do you even model it out?
We're definitely modeling out, but the way it really works in the real life, it's really about the sectors, about the clients, and honestly about the management you deal with, because a big part of managing a company is between the hands of the leaders. You mentioned inflation, you mentioned energy. If I look at back to comparison between Europe and US, I think Europe has 2 main challenges in the months to come. It's obviously inflation, and the ECB is going exactly in the same direction as the Fed. They're going to be hawkish, they're doing the job. And the second one is energy. And on the energy side, you start seeing, well, the good news is for 2022, for the winter 2022-2023, I think the Eurozone has managed to, to navigate through this energy crisis. And I think the second trend, and I can see this happening already there, it will happen here eventually. You see a real commitment to diversify sources of energy. Renewable, hydrogen, solar, wind, hydro when it works, but I think the train has left the station on this front. And in Europe, there is a probably very favorable regulatory and fiscal environment to support this trend toward ESG and sustainability.
Gianni Figlio, thank you so much for joining us here. And we do accept your invitation to come to Paris in April. We got team surveillance. I think
anytime you're
we look for that.
Really?
Thank you so much.
You're that person.
The little cafe. We can do the remote
house
from
for Thanksgiving.
There's a little cafe overlooking Jardin de Luxembourg, Cafe Suisse, and the three of us out there remote on the street.
Wait, but are you really that person? You go up and be like, thank you for inviting me to your house to discuss your dog with your wife.
Forward to it. Thank you so much.
He says, I'll be going baguette. I need a baguette. I need a baguette.
Great.
He is with BNP Paribas. Thank you so much for telling us France will do it again at the World Cup as well. On a Friday, market advance, S&P futures up 1%. Stay with us. Bloomberg surveillance.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
You do not get stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
The world like Bloomberg.
My team thinks 2023 we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
with unmatched reach and resources from more than 120 countries. The moment news breaks, 24 hours a day. Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Bloomberg Surveillance, we welcome you on radio and television on an eventful Friday. You say happy Friday. Well, don't ask Elon Musk. He's fighting for his life out of Twitter. Lisa, before we get to Mr. Gross, let's go through the events here. We got the World Cup set up. Simone Foxman in Doha. Wonderful to speak to Johnny Filion of BNP Paribas about that. And then we've got all these other stories, which is the number one in front of you.
It's limping into a holiday season with a great degree of uncertainty. I mean, there are all of these stories, whether Twitter becomes a main story, whether it becomes a side story, it is a specific story. There are also the other stories out there of Bitcoin and crypto assets and what's going to happen there. But the bigger story is central bankers seem determined to raise rates dramatically, and you have a lot of fear of what that's going to do to an economy, and people deeply uncertain about how to proceed.
In the common Bramo King ground, folks, is the American housing market. We will get data on that today here, which will be interesting to say the least. But a lot of smart people are doing this ex shelter, this ex rents. I mean, that's where we are.
The back and forth between whether or not we see a huge disinflationary force coming in next year is really interesting, and it really distinguishes the bulls from the bears. Are we setting up for another bond bull market? A massive bond bull market after the worst bear market in bonds going back in history. How much is that what people are looking at to 2023?
It sets up nicely for a wonderful conversation with truly my good friend William Gross joins us. He's co-founder of PIMCO, philanthropist. My father tried to buy a stamp collection but couldn't afford it. That was a few years ago, and we're thrilled to get an update from Bill Gross this morning, working on his golf game in California. The book is I'm Still Standing Out. Bill Gross, in your note to us, you take sharp exception of the financialization of the system and that Jerome Powell is dealing with much more leverage than Paul Volcker dealt with. What is the major risk for the chairman of the Fed?
Yeah, Tom, you're coming through broken here. Maybe we can take a pause. And I can't hear you very well. You're broken.
Okay, what we're going to do is work on the technicals right now with Mr. Gross. There's some problems getting out to him. That happens from time to time. But Lisa, this is a really important discussion, and the distinction that Bill Gross does is, and you and I saw this, I say more a year ago than now, is this idea of everyone, not to blame Powell, looking back to the giant Paul Volcker. All my radar's up when we do that.
Well, are we in the same kind of 1970s era? You say no. Other people are saying that's the risk that the Fed is trying to avoid, which is why they're going to raise rates and keep them there for longer. I keep seeing all of the notes that are coming out for next year, and the one uniting feature of almost all of them, they like bonds. They like longer duration
David
bonds.
Balin at Citigroup was heated on that.
Yes, they like 10-year treasuries. Are we setting up, and I do think one of the key questions into 2023 is, are we setting up for another bond bull market, unlike what we have seen in recent eras? Because we have seen yield built up, and then is it taken away with this belief that we are going to see some sort of recession and go back to some kind of normal that we knew before?
We'll see what we can do with Bill Gross here. I've had the privilege of standing with him and Mohamed Al-Arian generations ago at PIMCO, looking down at Bill Gross's Monroe Trader, which was the calculator before a Bloomberg terminal. And a guy like Gross remembers getting blown up in 1978. And the one thing not talked about here in your world is the bond markets have been blown up now, not by Powell, but the price down, yield up move we've seen is unprecedented.
This is because of inflation, right? And when you talk about the bond market, you're talking sovereign bonds, because yes, you have seen losses in the corporate space, but not akin to what people have previously expected. Again, Are we there yet is the big question. Are we there in terms of how high yields have to go to slow inflation? We don't know because we don't even understand the inflation that we're dealing with, which is the reason why people are parsing beneath the headlines, as you really rightly pointed out, without housing, without some of these other energy and food inputs. And they're saying, wait a second, we're seeing a big disinflation, but are we? Is it
Can we do a
lasting?
major shout out to PIMCO, the Pacific Investment Management Company that Mr. Gross basically invented? And as they've moved along, they made a spectacular call 2 years ago to shorten duration. And when Jerome Schneider was with us, it was amazing their indecision after their huge house call about what do you do now?
Yeah, and Bill Gross coming into this year said he doesn't think that treasuries are anything, that they're garbage. And he was right. I mean, it's been the worst route that we've seen in a very long time, perhaps ever, according to certain denominations. But at what point does that set us up for a good year next year versus just set us up for something that's more of the same? And that's the reason why yesterday, Jim Bullard coming at the 5 to 7%.
I agree. And the market moved right on it, on a dime.
Was a complete game changer if that were to come to fruition. But they don't understand the inflation just like everybody else.
I look at the Fed speak, and let's review this today. Klaus Nott of the Netherlands out moments ago with headlines. We spoke to him in Washington here a number of weeks ago. But folks, I want to get out front, and again, beneath the zeitgeist is Catherine Mann, and it's basically, and I wish the Fed did this, they bring in a token foreigner to help out the Bank of England. Others have done that. Adam Posen has done that now at the Peterson Institute. And here's Dr. Mann with her Citigroup work, her work at Brandeis over the years, and iconic work on international trade. And it's going to be really interesting to see what the Uberhawk man says about what now for Governor Bailey and the Bank of England.
This is their worst case scenario, right? I mean, stagflation is the worst case scenario for central banks. Then add in that there isn't the fiscal response, that Washington isn't going to necessarily open the purse strings. You're not going to see that from the ECB. You're not going to see that from European leaders.
We're going to pick up with Bill Gross right now if we can. We had some technical difficulties. Bill, we apologize for that. Bill, what is your prescription for the Fed? What should the Fed do as they try to manipulate their way through 75 and indeed 50 basis point increases as well? Well, we've had technical difficulties with Bill Gross. I'm going down in flames here today. And the reason, this is not the control room. They arrived sober. I didn't, so it's my fault we're not speaking to Mr. Gross this morning. So what we're going to do, I hope, is talk to Michael McKee. Michael McKee, you know, has had a really tough job here looking at the economic data. And as I've mentioned twice on the show this morning, I think the basic idea here is, what do you do about a jobs report? Lisa, I'm going to state flat out that the jobs report has become important the first week of December.
How quickly does it soften? How quickly do you see unemployed really rise, which is exactly what the Fed has been saying they want to see, this sort of perversity of desiring some sort of downturn in order to combat inflation, which is seen as the bigger problem.
We went out and we tried to find among the 19,000 employees of Bloomberg someone dumber than us in the World Cup and not as good as John Farrow, and that would be Michael McKee. We're having fun with this today. And, you know,
yeah, that sounds like
it. It's going well. Is it your fault we couldn't talk to Bill Gross?
Probably.
You pulled the plug.
I mean, to me, the funniest tweet that today was Anne-Marie Horder she's in Bali and she's following the World Cup and she tweets, yeah, but you can still get Bud Zero.
Yeah.
I mean, that's kind of the most important thing.
That's a serious thing. As you
pretend
in the culture and the social of the moment, you can get it. The shift I see, Michael McKee, from bullet 7% is all of a sudden the jobs report in December is important. When do they do that jobs report, the two reports, the establishment and the larger survey? When do they actually count the bodies?
It's based on the payroll period that includes the 12th of the month. And different companies pay different ways. Like if you get paid monthly, you're going to be in there on the 12th of the month. But if you're paid weekly or biweekly or even on a day rate, it's that week. So we've just had that, and that was what the jobless claims yesterday were reflecting, the payroll week for November, and the fact that they went down, probably some good news. The household survey goes on basically all month because it's a telephone survey of people. It used to be,
they've never
used to be more in person.
What do they say? Are you employed?
Literally,
yes,
this is
literally. They literally say that.
This
Do
is
you have a
John's.
job?
This is John's big sort of his issue with some of the sentiment surveys. He's like, who do they call? They call 500 people. They're like, I'm feeling like inflation might be 1.3% in 2065. I am curious. I mean, I think it's a lot more accurate than that. I give a little bit more credence to it. When it comes to the employment picture, I read a number of stories and a number of analyst reports talking about how tech is not the rest of the employment market, and that actually companies are hanging on to employees for as long as they can. And then you see reports about, other companies, potentially even Disney, having some cutbacks. Other companies outside in the entertainment space. Is this how it begins, or is this going to be a stickier kind of picture with tech as the main outlier?
Well, I think both of those thoughts are correct. It's how it begins as companies see demand start to slow, but we haven't seen really demand at Disney parks start to slow. So we'll have to wait and see how they do that. In the tech sector, it seems to be a story of overgrowth, too many people hired, and so they're rationalizing their employees. But Lisa, you're right. It was so hard for people to find workers, and that I think Target's the perfect example. It's like, we're going to do a $3 billion restructuring.
Without job dynamics.
But we're not going to cut jobs.
You and I have never seen that.
No, it's a very unusual situation because it's all post-pandemic, and 100 years since we had one.
We got something out of Bill Gross. He says the 49ers will beat the Cardinals on Monday.
Thank you. I'm glad that we got the important stuff.
Technical difficulties. Thank you, Bill Gross, for that nugget.
And thank you, Michael McKee, so much for coming here. I actually am very curious to catch up with you as we get some of the housing data as well and try to spin it forward. We're also going to be spinning forward just this confluence of both a bear market rally, or the potential of it, and how much longer it can be sustained if you do get some sort of deterioration in inflation. Coming up, we're going to be speaking with Jim Caron of Morgan Stanley, and we're going to be having a great conversation about how to move forward. Also, Subhadra Rajappa of Societe Generale, and Bob Dole, formerly, but currently.
That's a phenomenal show. I'm not going to go work with Paul Sweeney so I can listen. And what's important there is Bob Dole's reality of years. But what a perfect day to talk to Jim Caron about just the dynamics of this curve inversion and what it means in the 3 months, 10-year as well.
How do you stay nimble as you expect things to be maybe okay into year end and then shift?
A lot of yoga.
Right. Yeah? Is that, can you recommend that?
Well, that's what Bill Gross would tell you.
Oh, thank you. He's channeling Bill Gross.
Since he's not here. I'm channeling him, yeah.
Okay, very good. Well, stay with us as you can. Futures up 33, Dow Futures advanced. Nice lift to the equity market this morning. From New York, Lisa Abramowitz, Tom Keene, Michael McGee, and we thank Bill Gross for the attempt. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. European Central Bank President Christine Lagarde says interest rates may need to be lifted to levels that restrict economic expansion in order to drive down inflation. Lagarde adds the risk of recession has also increased, but that a downturn on its own won't be sufficient to tame soaring prices. The ECB is expected to raise borrowing costs to 2% or more next month. A Swedish investigation into ruptures at the Nord Stream 1 and 2 gas pipelines finds the cause is, quote, grievous sabotage. The investigation will continue analyzing the sections where the damage occurred and explosive residue was found. The pipeline, which crosses the Baltic Sea to Germany from Russia, is a focus of a probe by authorities in Sweden after 2 leaks were discovered. Chile's economy contracted the most on a quarterly basis since the start of the coronavirus pandemic, after both annual inflation and the benchmark interest rate hit multi-decade highs. Gross domestic product fell 1.2% in the third quarter from the previous 3 months. And today in San Jose, California, a federal judge will determine Elizabeth Holmes' punishment for her role in the collapse of Theranos, closing a key chapter in one of the biggest scandals in Silicon Valley history. In January, Holmes was convicted on 4 counts of investor fraud and conspiracy. U.S. prosecutors have asked for 15 years, while her lawyers say she should get home confinement or 18 months in prison at most. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Stages of a sustainability revolution that has the magnitude of the Industrial Revolution coupled with the speed of the digital revolution.
Nobody covers climate change like Bloomberg, your global business authority.
At this stage, I would say that the 2-year yield reflects monetary policy expectations in the very short term, but the 10 and 30-year rates, that's the market simply moving on to what's next, and what's next is going to be a pretty significant economic slowdown. So the inversion is simply a tale of 2 different curves.
The spirit of Bloomberg surveillance on very short notice. Thank you to Sikorsky and the surveillance helicopter for bringing in Ian Lingen yesterday at BMO Capital Markets on the stunning curve inversion. Now more inversion than when we spoke with Mr. Lingen yesterday. 70 basis points for global Wall Street. That's a huge, huge statistic. The response yesterday was jaw-dropping. Greifeld with more tweets than Taylor Swift. It was just unbelievable to see her. For those of you on radio, wearing black again and mourning for Bitcoin in her world, Katie Greifeld joins us here on Crypto. What do I look for this morning? What's the thing that matters right now in this saga?
The thing that matters right now is we're expecting from FTX's lawyers to get a list of the 50 biggest creditors.
Domino's Pizza takeout, 5 p.m.?
It could be anything because we know there's more than 1 million creditors here. So
are you serious?
I'm serious. That was a headline on the terminal.
Well, who are the 20 biggest that we know? I mean, are the Winklevi, are they creditors?
I would imagine so. And you think about how many people use this exchange. It was the second biggest exchange in the world for crypto by spot volume. So you add that all together, that is a lot of people potentially holding a bag here.
Will there be, I mean, the stock, listen to me. The coin, as she calls it, has stabilized up $200, 16,700 is well. Can there be news flow today and into Saturday of these tangential stories like Genesis?
Absolutely, and that's what we're on the watch for. The crypto team will be working all weekend. In terms of Bitcoin, Bitcoin will also be working all weekend. It never stops trading, but what you're seeing today, the fact that the coin is up, that just goes to show that this is a macro asset that we're talking about right now. Bitcoin is somewhat unaffected somehow by all these huge
How?
blow-ups.
That's what I hear from everybody that's dead set against a scam, their words. How does Bitcoin stay elevated given all this tension?
Matt Miller would compare it to Lehman and the dollar. After Lehman blew up, the US dollar, it didn't break ultimately. So that's the sort of TradFi comparison that I can
You're
make.
telling me FTX and Genesis is not linked to Bitcoin?
I'm telling you that there's still hardcore believers who are using this as a sort of validating moment, saying that the Bitcoin technology, the Bitcoin blockchain, this still works. It's when you're talking about these very centralized crypto companies that go against the underlying ethos of the space, that's when trouble starts.
And those fancy words like ethos, folks. Let me get back to the real world. The venerable Ace Greenberg of Bear Stearns made a market with a paper buy ticket in his left pocket and a paper sell ticket in his right pocket. Do you believe that this quote-unquote market into the weekend is a valid market, or are we trying to report out manipulation?
I mean, this is the case always when we're talking about weekend markets in crypto. There's not a lot of liquidity. Again, we talk about how this is a 24/7 asset class, if you want to call it that. But it's so hard to make too much of the price moves over the weekend. The people who are trading, it's not necessarily the big guys.
Yeah, but the big guys, don't they say at one point, I need to cut and run? They don't call Goldman Sachs up and say, I got 400,000 shares, can you work it out? Or 4 million shares, can I work it out? If somebody wants to unload, who's got a lot of this coin, if they've got this coin, how do they actually unload said coin?
Well, right now, what's interesting is you're seeing a lot of money actually come to decentralized exchanges. That is a thing that exists. The likes of FTX, Binance, Coinbase, those are all centralized exchanges that have some role.
Are they in the United States?
Binance? No. Coinbase?
FTX?
Yes. FTX? No. But they did file
So
for
then
bankruptcy.
everybody wants regulators to the rescue. What is the SEC supposed to do about abracadabra, Alibaba in the Cayman Islands, or FTX off on another island? What do the regulators do about that?
That's what regulators have been grappling with for really the past 2 to 3 years. It felt
I
like
agree.
For a while they were trying to
agree on
ignore it.
something.
We do agree. We do agree. But it's an open question what they can do. They're trying to figure that out right now, which of the letters of the regulators actually regulate this asset class. We know that next month we're going to get House and Senate hearings on the FTX collapse. They're hoping that SBF himself